Thank you for joining me today. Welcome to our short presentation. Have you ever wondered how the rich keep getting richer while broke people stay broke and the middle class seems to be shrinking? Well, this isn't nearly as mysterious as it may appear when you examine the differences of how broke people, the middle class, and rich people spend their money. Now, this is such a simple concept yet so profound, it nearly knocked me out of my chair when I finally understood it. I'm going to show you exactly how the rich spend their money, and you can evaluate for yourself why they keep getting richer and the broke keep getting broker, and why the middle class remains so stressed out. Now, to get started, I'd like to review some financial terms. The terms you need to be familiar with are cash flow, which means money you bring in, expenses, which means money you spend, and assets. Now, this is the most confusing one. You're probably familiar with the traditional definition of asset, which is something you own or have equity in. However, back in the 1990s, Robert Kiyosaki introduced us to a new definition of an asset in his groundbreaking book called Rich Dad, Poor Dad. Robert taught us that an asset is something that pays you, and that's the definition we'll be using here. Liabilities is the last term, and it's defined as the things that cost you money. As an example, a house is usually viewed as an asset, but can it actually be a liability? The answer is yes. With our revised definition, anything that costs you money is a liability, not an asset. If you have a mortgage, your house is an asset to your banker because it pays him or her every month. But can a house also be considered an asset to you? The answer is yes. In the right circumstances, it could when it pays you money. Let's say you buy a house and you rent it out and it pays you a positive cash flow every month after expenses. It would be considered an asset. Now let's look at how broke people spend their money. Now, when I say broke people, I'm not referring to the destitute. I'm speaking about that large portion of society that lives paycheck to paycheck and never seems to have any money. In fact, there's usually more month left at the end of their money, and I'm sure many of you can relate to that group. On payday, broke people buy stuff. What's stuff? Well, that's inexpensive things that they don't really need to survive. So cash flow comes in, and then it goes straight out the expense column to buy stuff. You see, broke people never really educate themselves on assets and liabilities. They justify buying all the stuff because it costs so little. But over the years, it's all they ever have. The problem is their cash flow never produced or created more cash. Now, please understand that I'm not undermining or taking any shots at this or any group. I just see a lot of financial difficulty out there, and it really doesn't need to be that way. Creating wealth isn't a mystery. It's a formula. The only reason someone doesn't create wealth is because they either don't know the formula or they don't apply it. Now let's take a look at the middle class. The middle class is a group that society mistakenly thinks is rich. They're not. Yes, they typically earn a six-figure income and many of them appear rich, but it's what they buy with their money that keeps them prisoners to the middle class. What they typically buy are liabilities. Remember the definition of a liability? Things that cost you. By buying liabilities, the money gets pushed out from the expense column. Liabilities are items like cars, boats, houses, airplanes, and credit card debt. They actually spend equal to or more than they make, meaning they have to go to work and make a certain amount of money every single month just to cover their liabilities. The other important issue with the middle class is that normally all of their cash flow is dependent on their own effort, meaning that they've educated themselves to exchange their knowledge or expertise for someone's money. On the surface, life is good. The reality is that it's a roller coaster ride. That's the middle class. Now let's take a look at how the rich people spend their money. Rich people acquire assets. Again, an asset is something that pays you. If you want to become rich, buy assets that earn you more money. The rich spend their money on things like stocks, bonds, mutual funds, real estate, or education. Now, I know many of these investment tools very well because I tried to use them to generate cash flow, but with all the financial ups and downs in the market, I was left with very little control over how my asset worked for me. Another example of assets you can acquire that pay you are cash-generating opportunities, especially those opportunities that can generate a passive cash flow. Passive, meaning once you build it up, the money continues to flow, whether you're building it or not. The rich are extremely eager to find these passive income generating opportunities because these opportunities continue to pay them month after month, year after year, long after they've stopped working the opportunity. Here's what I've learned. For those of us who do not currently have a lot of cash flow to buy an asset, we can partner with one another and we can leverage our efforts. We've created a plan that is designed around the wealth building formula of the rich. We tap into money we already spend on ourselves and leverage our current consumption habits. By partnering with one another and an award-winning company, we will get paid month after month, year after year, simply for expanding the company's brand presence and buying from our own store. We do not have to rely on the government, corporations, or the banking industry for our financial success. Instead, our financial success is built on the power of the partnership. In conclusion, here's what I've learned over the years. You can't find these passive cash-generating opportunities unless you're looking. Then once you find them, you must be willing to see what fits you and then act. So remember, broke people buy stuff. The middle class buys liabilities, and the rich acquire assets, preferably cash-generating opportunities that can generate passive cash flow. Now, I trust that you found this introductory information helpful. To learn about the power of this partnership, click on the link that follows this video.